Hello and welcome all. This is Shrinath Diwan, Deputy CEO, AIF PMS Experts India. This is our show called Ask the Expert, particularly designed to get expert opinions, information, and forecast to keep our listeners up to date in the best possible way. Before moving ahead, just a brief about ourselves. We, the AIF PMS Experts India, founded by Mr. Vikas Agrawal, who comes with 2 decades of domain expertise and well-known name among the most HNI families in India. He shares his knowledge about alternative investment through podcasts, educational blogs, and other mediums available at www.aifpms.com. Those who are first-time viewers are requested to log in to www.aifpms.com and get more information about us, and feel free to register there and our experts will get in touch with you. And now coming to our today's agenda of navigating real estate investments with Mr. Ramashraya Yadav, founder and CEO Integrow. He is a leading figure in India's real estate industry. He's a Harvard alumni with 20+ years of experience in construction, real estate, banking, and investments. As a former CEO of Edelweiss Real Estate, Mr. Yadav managed a stellar real estate portfolio of over 5,000 crores. His exceptional investment and organization skills are evident through a successful realization of market transactions. Mr. Yadav also made history by spearheading India's first real estate IPO for Orbit Corporation Limited, attracting major domestic and global institutional investors. He also serves as a board member of India's first NSE listed PropTech company called Aurum PropTech, solidifying his significant role in the real estate and PropTech sectors. Hello, Mr. Ramashraya.
Hi.
Hi. To start with, can you please, for our listeners, share your journey in the industry and what motivated you to establish Integrow? Over to you, sir.
Good afternoon to your listeners and friends and investors. Thank you so much for a very kind introduction. And I'm just trying to take a leaf from there. And I started with construction major, Shapurji Palanji and Company Limited. Learned the ropes of real construction there. Moved on to join one of very early stage professional real estate companies in 2002, which went listing in 2007, touched a market cap of about $1 billion. 2013, I moved from there and took up a challenge with setting up India's first active credit in real estate. And when I say active credit, my idea was that most of the lenders were focusing on underwriting capabilities and lending the money to real estate, wherein all that real estate developers needed was also a support and control and active monitoring of the portfolio. And with that, in 2014, we started India's first real estate distribution platform, way ahead of most of that you see. And the idea was that wherever we were lending to the developers, we would take between 25 to 30% of inventory at a cost plus some margin, and you would launch the project. And the idea with that was that once we launch, all the differences right from design to construction planning would get sorted when we were launching. And when you sell a 25-30% inventory, more professionally as an institution, your risks go down on the credit. And that was exhibited that when we exited the entire portfolio in 2019 to Merit's South Korea. So that's my overall experience on how I moved from construction to real estate to lending to active credit. In 2020, I started Integrow, and with the vision that in India, we have most of the real estate credit companies or banks, for them, real estate investing is an adjacent opportunity. That if they have a portfolio of X crores, they have 5 to 7% in real estate. Because of that, the ability to develop specialization and invest in specialization was lacking. And that's where I came up with this whole idea that is there a possibility in this country that we can do a true blue fiduciary, number one, because we didn't want to be, owning the funds and do like NBFCs and then get into the ALM management. The second was that while we are doing fiduciary, we will not do a couple of things. And we were very clear. We will not do advisory. We will not do an adjacent business. We will remain through blue investment company. And that's what we have done as of now. And the idea was that if real estate, which is already at about, 550 to $600 billion industry, does it not require a specialized uh, investment outfit, a franchise, which looks at real estate and nothing beyond that? So that's the basic idea with which we started. Currently, we are a team of about 30 people. So from a private equity perspective, it puts us as one of the large, serious private equity players, though we are at an early stage of our evolution. But we are not boutique, just to mention that. We are specialized. We have about 30 people, as I said. We have three specific products currently. The first being residential working capital investing, where you invest and the working capital keeps coming back, gets repaid out of the sales. The second one is a 1,000 crore of commercial real estate fund where we are only buying income yielding properties with leverage, so no construction risk in that. And third one is we are also India's first PMS with discretionary ability to invest or advise investing in real estate, under which we advised one transaction for a third party, which is basically one of our key investors, to invest in equity. And the idea is that in India, for real estate, we have a huge upside for equity investment in real estate, provided we also actively manage to shape these companies and invest in the corporate governance, which has been a real bone why the industry does not have the kind of respect that it should command. So that's my little journey.
Very, very well said. Very well said. Going forward, reflecting on the past, how has real estate performed as an asset class in India specifically, and what have been the driving factors behind its performance?
So, I mean, India's real estate story is great, and let me start it from early 90s when I was studying in class 10 in 1991. I'm not sure why I was following real estate, but there must have been something in store for me. But if you look at the first decade post liberalization, there was no supply. There were a handful of developers, and the investors were basically the early stage bulk buyers. People who come, pooled the money, invested in buying the land, they made good amount of money. So the whole run lasted till 1995-96. post that crisis from 96 to 2002, there was one of the longest down cycles of real estate. And the reason was it was not backed by volumes. The prices had moved by close to about, on the lower side, 50 to 60%, on the higher side, 300 to 400%.
Right.
In 2002, the press note 2 came, which allowed the FDI, and that was, I would say, the first level of unlocking for real estate. From 2002 to 2010-11, the capital supply happened from private equity and also from the banks. Now, unfortunately, both either backed the land acquisition, large tracts, thinking now it is India's time, the capital is available, we'll go all in and we'll go all out. Now, that's where the first signs of trouble came in 2010 and 11 on both sides. Private equity investors, if not all, majority of them got stuck at the land level investments, because it takes longer time in India to mature the land from land stage to construction and to delivery. On the second side, if you remember, there was a massive credit cycle issue with NPAs. Now, from 2011 to 2015, the banks pulled out. Private equities took a pause. They focused more on commercial. And NBFCs started filling that gap. NBFCs continued that journey till 2017-18, and then came the IL&FS and DHFL crisis. And that crisis, if I can simplify for your listeners, was very simple. That in 2016 November, when the demonetization happened, there was a flush of liquidity which came and was available in overnight money, which is where most of the NBFCs scaled their book.
Right.
Only to find that when that call came back to return that money and manage their ALM between the tier 1 capital, tier 2 capital, long-term debt and short-term debt, that's where again the second level of, I would say, the balancing started happening. And that cycle lasted till 2020, or hitting the COVID, at least for the first 4 months. And post-COVID, when people realized that now it's time to go and buy, because the cycle was very, very long, between 2015 to 2020, about 5.5 to 6 years, which was equivalent to 96 to 2002. And that's where you see now a dream run for real estate. The reason I believe, and again, it is my belief, that why we see this cycle in real estate more robust is because for the first time in this country, one, that there are corporate developers. They understand the risk, they understand the asset liability management. Two, the prices have not gone, so there is enough and ample supply. Three, there are new classes of investment tools where people can play directly as well as manage. So there is no mad rush that, if you remember in 2006 and 7, that the prices were changing between morning and evening, because people thought that there is no tomorrow. At least now those things are sorted. And other thing is what I call as a 300 days of detox of Indian real estate that happened between 8th November 2016 to July of 2017, where three things happened together: demonetization, GST, and RERA. So today, whatever we are seeing, that secular rally that we are seeing in the real estate is a result of that. That's the story of how real estate has been driven through different cycles of liquidity. What has though changed between then and now is, earlier people took bets directly first at the land level, then moved and took construction risk with the developer. Now people have become smarter and they are taking those bets through the managed assets. So be it AIFs, be it PMS, be it secured NCDs, be it fractional ownership of real estate, these are the new tools of investment that's available with the investors.
Very well said. Very well said, sir. Mr. Ram, looking towards the future, what trends do you anticipate in terms of real estate returns and the evolving landscape of investment instruments like REITs? You have just mentioned the ways that are increasing for investment in real estate. You must uh, throw some light on REITs.
Yeah. So, I mean, let me try and phrase this from the future perspective. I think what we have seen till now is people making money on direct investments that moves to indirect. And REITs, fractional AIFs are nothing but ways to take real estate positions through managed assets through qualified investment managers. The future for both is when you are taking a direct asset exposure, you have three risks. Number one risk, and the most important, is the construction risk. Can you manage it? And what are the cost of managing that? Two, the second risk is the risk of inflation. That's one animal in the room that nobody knows the size of. So if you think that 8.5%, 9% is a great return, inflation can easily eat it out. The third, and at least from investment perspective specifically I'm speaking, is the fate of rupee to dollar. I think that itself decides how the movement happens in this. So with these three risks, the possibility and the chances are that you do not have too much left on direct investment. You can certainly use direct investment route for satisfying your needs of housing. But beyond that, if you are investing, it is better to invest through proper investing tools. Now, within them, there are again 2 or 3 classes. The top one, which is high return, high risk, where you're leaving your money to, let's say, a AIF manager, you can make somewhere between up to 16 to 17%, 15%, 14% for sure. The second level is when you are, through the same investment managers, buying more secured NCDs, instruments, or bonds, which are not very liquid, but they'll still give you between 12 to 13%. And the third one is when you are buying the REITs, which are more liquid, and they can give you a return of easily 9 to 10%, depending on the interest rate cycle. If the interest rate cycle falls, you make more money because these REITs are leveraged. So that's overall how one should look at a portfolio of real estate within these three classes of investments.
Very well said, sir. For investors who are considering real estate, what advice would you offer regarding portfolio allocation, preferred investment avenues, and factors to consider when choosing between buying and renting a property?
Um, I think let me try and put this question in 2 parts. Part one is that, the new age or Gen Z that we call, these are the people who do not want to be bound by buying a property and marrying it for life. Now, there are avenues like multifamily living on rentals. There are professional companies managing it. And then there are avenues of co-living, depending on which city you are going. Because India, if you see, there is also an economic dispersion happening across. Now, Mumbai is not the only city where you have the job opportunity. Now, there are tier 2 cities, tier 3 cities also catching up.
Yes,
And
yes.
post-COVID, people have realized that quality of life is more important compared to finding your house in one particular city and staying there. Now jobs are more fungible geographically. So
Correct.
my advice to the young uh, generation is that they should look at investing through managed investments, and they can use rentals as a way to express their freedom to stay in this country wherever they want. The second one is the investors, or people who are buying, let's say, legacy properties. They have to certainly look for properties not really in the center of the cities, but there is this whole new theme of new age connectivity in India, whether it is through circular ring roads in every city, or through bullet trains, or through Vande Bharat. This will completely change the way we use the real estate. So you have to be 5 to 7 years ahead on what would be your lifestyle, rather than simply going a property from a 2 BHK, 3 BHK, or a 5 BHK perspective. Because, say, for example, and I'm just taking a very simple example, that our office is here in Bandra complex. Uh, the bullet train is 50 meters from here, right? If I have to go to my house at Lower Pareli, it takes close to about 45 minutes. But if I take a bullet train and I have to cross Thane and go further 20 kilometers, it takes only 20 minutes. Now
Yes,
you know where the real estate you need to invest in. So I think, and I'm only saying from the perspective that when you are taking a house to consume it, you're looking to stay in it, then you have to give credence to the social infrastructure and the logistical connectivity, which will change in next 7 years. So that will save you a lot of money. And for that class of investors, I think if you are very risk averse, go for more stable income REITs. If you can take risk, put your 30, 40, 50% of money in higher yielding assets, which is either through AIFs or through bonds.
very well said. Liquidity. Specifically, liquidity has often been cited as a significant challenge in real estate. How do you see the liquidity landscape evolving in the real estate market? And what strategies can investors employ to mitigate liquidity risks?
See, incidentally, the real estate investment, and specifically the direct ones, are something which are driven by the prices in a particular geography. So if you are buying a house for 5 crore, now if you look at the 5 crore bracket in a particular geography, which is only 10%, then you know the class to buy it in secondary market will be very, very less. And that problem quadruples only because we do not have a reverse mortgage market as of now. We have a very, very weak secondary market. When you want to buy, there are hardly two projects, but when you want to sell, there is no one. So that challenge will always remain in the secondary market when you are investing in property directly. If you are investing in the financial instruments of the property, and that's why I always advocate that buyers in India cannot replace the equity, the higher risky equity with the developers when the construction is on. There is this whole, I would not say greed, but there is an expectation that if you invest in an under construction property, you will end up making more money. But there is also that equivalent risk, not just of the construction, but also the liquidity in case something were to go wrong if you want to exit.
Correct.
So you'll always hit that wall if you are investing in that. I think government is already working. RBI has been considering, and there are a couple of property technology platforms. For example, at Aurum PropTech, we are piloting with a product called as InstaHome, which is more like a used car, where we buy the house, refurbish it, restructure, and then sell it over a period of, let's say, 6 to 9 months. Now, those are the kind of products which will give some liquidity, but we are far from there still.
You are basically in a for a prop tech sectors. You have Aurum Prop Tech Limited. You are very active in listing that Aurum Prop Tech Limited. What I would suggest for our investors to show some light on prop tech as a sectors and products that sectors can make for the investors and uh, investors of specifically Indian investors.
So, see, overall, we are at about, as I said, 600 billion odd size of real estate. The total digitization achieved on a 600 billion is less than $2.5 billion today. Now, in any industry which goes through digitization, you start with a 10% as a minimum, market, or what we call it as the TAM, the total addressable market. We are still far from there. We were very early mover in PropTech. We have invested in 3 areas. One area is where the digitization on the customer relationship management, or the efficiency at the sales process itself has to happen. We have invested heavily on that. The second size is the softwares that are needed to manage the properties. Be it co-living, be it multifamily living, we invested and acquired Nestaway, one of the largest platforms in PropTech. We acquired Hello World, which manages close to about 20,000 beds across the country, the third largest co-living company. And on the third side, we developed an internal software which is data analytics and blockchain led, which is Arjun, which is by Integrow. And the basic idea of Arjun is that right from evaluation to onboarding to even, addressing a 1 lakh rupee payment to developer when we are investing, everything is on that platform. And the access of that is even to the investor. So our basic idea was that when we are fiduciary, investor knows the risk exactly at the same time that we see it. Rather than, depending on that quarterly NAV number, and then, how NAVs are respected in India before the regulation comes. So we have kind of created that so that our investors not just get the information on their fingertips, but they know the risk at the same time that we know of.
Very well.
So,
lastly, shed some light on how Integrow is revolutionizing real estate investment and its impact on enhancing accessibility, transparency, and efficiency in the market.
So, these are simpler things in our world that we talk. First of all, we said that the 3 values that we exercise, the first one is simplicity. Because simplicity eventually gives us confidence that whatever we are doing, if it is simple and can be understood by our investors who are even investing for the first time, that means we create the alpha for all. That's our belief. Now, to do that, as I talked about technology, if you try and simplify and go to the core of technology and the culture that we have created, is that whatever we are doing, if it is all recorded across without the ability of anybody within Integrow to change it, because that's why it is on blockchain, that itself is a testimony of what we are trying to do. And I think the revolution in fiduciary is to remain true fiduciary, decentralized decision making, but put it all together on the same platform so that you are responsible and accountable to the investors. And that's what we have done.
Very good. अभी पिछले हफ्ते ही सेबी चीफ ने डेमोक्रेटाइजेशन पे एक अच्छा वीडियो किया था, आपको पता होगा।
जी
दैट्स ऑल। ये सब उसी के अंडर आता है, ऐसा मेरा कहना हमारा कहना है कि
जी
डेमोक्रेटाइजेशन ऑफ ऑल इन्वेस्टमेंट इंस्ट्रूमेंट्स इज मस्ट इन द कंट्री।
जी
To summarize, what would you uh, advise to investor about the investment uh, of real estate specifically? How should be the what could be the approach?
देखिए, बहुत सिंपल तरीके से, एंड आई सी इट, हम जब रियल एस्टेट का नाम लेते हैं तो सबसे पहले एक नेगेटिव थॉट आ जाता है कि हम तो फंस जाएंगे, लिक्विडिटी तो नहीं है। आई थिंक ये जानने से ज्यादा अच्छा कि आप ये कहें कि कितना पैसा बन रहा है, 19 बन रहा है, 20 बन रहा है, 30 बन रहा है, वो जानने से ज्यादा अच्छा है आप ये जानने की कोशिश करें कैसे बन रहा है, कौन सा रिस्क आपका इन्वेस्टमेंट मैनेजर ले रहा है। अगर आप ये जान सकें तो देन आई थिंक रियल एस्टेट एक ऐसा सेक्टर है जहां पे बहुत हार्ड वर्क करना पड़ेगा आपको पैसा लूज करने के लिए। पैसा बनाना इजी है, उसको गंवाना बहुत डिफिकल्ट है, बट लोग वो भी कर लेते हैं, और वो इसलिए करते हैं कि आप ऐसे लोगों के साथ इन्वेस्टमेंट कीजिए जिन्हें ये काम छोड़ के दूसरा नहीं आता है और दूसरा करना नहीं। अगर आप डेंटिस्ट के पास जाके बुखार की दवा मांगेंगे और ये मान भी लेंगे कि शाम तक मैं ठीक हो जाऊंगा, तो रिस्क क्या है वो आप समझ सकते हैं। तो एक इन्वेस्टर से मेरी यही रिक्वेस्ट है, यही गुजारिश है कि अगर आप रियल एस्टेट में पैसा लगा रहे हैं तो रियल एस्टेट एक्सपर्ट के पास जाएं।
Yes, sir.
आप उससे समझें, और आप उससे ये नहीं पूछे कि कितना पैसा बनाओगे, क्योंकि आप तो इन्हीं में 10-12% बना लेंगे। आप उससे ये पूछें कि पैसा कैसे बनाओगे, मेरी सेफ्टी कहाँ है, सिक्योरिटी कहाँ है। बिकॉज रियल एस्टेट के डेमोक्रेटाइजेशन का मतलब ये है कि इंडिया में हम हर साल 5 करोड़ लोग नहीं ला सकते जो 5 करोड़ का अपार्टमेंट खरीदें, पर यूटिलाइजेशन जरूर, हमारे पास यूटिलाइजेशन के लिए जनता जरूर है। So we need institutions in India which not only help deliver these projects and these units, but also have the capability to own them and operate them. And then everybody invests in making it very efficient. So my request and my advice to all investors is, you don't have to read the fine prints. You have to read the fine intent. And थोड़ा कम कमाइए, पर वो कमाइए जो कि आपका सर्टेनिटी है। बिकॉज रियल एस्टेट इज रियल, राइट, इट इज ऑल अबाउट रियल, इसमें कोई अनसर्टेनिटी नहीं है। तो कम से कम जितनी सर्टेनिटी है उसे तो समझ लें।
Rightly said, rightly said. As a domain expert, you have given a very valuable advice to the investors. Thank you very much for remain with us, given your genuine advice to us and our investors. Thank you very much for your Integrow asset management.
Thank
Thanks.
you for hosting me, and thank you for asking the questions from heart. Thank you.